Welcome to week 3, day 3. We're approaching the middle of this third week now, and we've looked at the alligator, and I hope you're getting a little bit excited about how the alligator can really make you a fortune if you do it right and just do what it says. What we're going to do today is look at how the alligator behaves in various different markets, both stocks and commodities, and we're going to see how simple it is and how that we don't need any other information. In fact, when you come here to a private personal tutorial, one of the things we're going to strongly suggest to you is that you do not look at FNN, you do not read the Wall Street Journal, you don't read any newsletters. All you do is communicate with the market itself and let the market tell you exactly what to do. So today's goal, we're going to get more experience in using the alligator as an aggressive asset allocator and an entry into the market. So let's go right to the charts themselves. Here we see the same chart of the coffee that we saw yesterday, except you'll notice there's a few other little things that are on the chart. And what you see are these little green deltas here. Those are fractals. And next week we'll talk about fractals. In fact, we're going to spend the entire week on fractals. But remember that our strategy is that when the alligator is sleeping in this direction over here, we don't want to get into the market until after we see the first fractal outside the alligator's mouth. This is the first fractal outside the alligator's mouth. This is a fractal going short. This is a fractal going long, which was hit 3 days later. So the first thing we want to look for is our first fractal buy outside the mouth. Now, granted that we haven't talked about the fractals yet, we just want to show you today, this is kind of the bamboo steamer and Ginzu knives. This is kind of a temptation for you to get excited on this. Here's our first fractal outside the mouth. Here's our second fractal, our third fractal, fourth, fifth, and sixth fractal. So on this chart, we would take every one of these. Our first buy would be a buy when that is triggered. This would be a buy. It wasn't triggered until 2 weeks later. Then this was triggered about a week later. This was triggered 3 days later. This was a week and a half later. And this was about a week later. But in this move, in this 2 months move, we had 6 entries, 6 fractal entries to go long. No way could we go short, because if we went short, we would be feeding the alligator. Now, we do have some fractal indicators here and here and here, for example. But again, since we're outside the alligator's mouth, we want to let the alligator chase the price. And we want to be on the side the alligator's moving. And this is the first example that we'll look at. Now, here is a fractal down here at B, this point here. But notice the price never triggered that fractal. Here's another fractal down here at point A, and this was a fractal that was indeed triggered on this date. So while the alligator's mouth is closed, you may have a few whiplashes. But even with 2, 3, 4, even 5 whiplashes, you're going to make so much in this move, this blind chicken move up here, that you won't be worried about those small incidental losses. Let's take another example. Let's look at Dell Computer. Now, this is Dell Computer for 3 months. And notice that your first fractal outside the mouth was here. You had a fractal down here, you had a fractal down here, but neither of those, the price didn't go past it, so they were never triggered. Here's your first fractal outside the alligator's mouth. It was triggered about a week later. You did not go short anywhere because you would be feeding the alligator, and we'll talk about how to get out later, but you would not be out of this. Now, here was a fractal up. This fractal was not taken because a fractal was hit later at a lower price. And remember that we're trading the market of what's happening now. So here's your second fractal, third fractal, your fourth fractal didn't hit until there, your fifth, your sixth, your seventh, and your eighth has not been hit. But you were in this long all the way through. You would probably have not gotten out until this point right here. This close below the teeth, or inside the teeth, between the teeth and the jaw. This is coming later. Don't worry about that right now. Our job at the moment is simply to experience and to see how the alligator, using the alligator, keeps you in tune with the market so that you're always trading with the trend and not against the trend. Let's look at some other examples. Well, let's look at this first fractal buy just to review. Here's 2, 3, 4, 5, 6, and 7. Let's look at another chart now. Trading the balance line outside of the market. We're going back to the coffee chart now for 2 months of the coffee in April and May. And what we're going to do here is show you the buys on the balance line. It'll still be several weeks before we look at this way of entering the market. Again, what we want to do now is just give you a sort of a preview of how all of this adds up. And we're going to use this same coffee chart, the same 2 months, and see what would have happened if we had traded this in an almost mechanical fashion, taking every trade in the right direction as discerned by Professor Al E. Gator. So the BF here, that stands for the beginning fractal. That's the first trade we would take. This is the first balance line. Now, don't get upset because you don't know what a balance line trade is. That's okay. We're going to cover that. Here's the second balance line, third balance line, fourth, fifth balance line, sixth balance line, seventh is up here, and we have an 8. So in any trend move, you're going to have more balance line signals than you have any other signals. So in the same 2 months, we had 8 buys that were triggered by the balance line in addition to the fractal buys that were triggered by the fractal. Let's look at another example. Let's look at the AO signal. Now, the AO signal is based upon the momentum. And the momentum we illustrate in a chart down here, a histogram chart at the bottom. This is the momentum of the market. And the momentum will always move before the market moves. As a matter of fact, the price is the last thing that moves in the market. Before the price moves, the first thing that moves is the momentum will either accelerate or decelerate. Then the next thing is the momentum will change direction. Then the next thing is the volume. And then previous to that are all the traders like you and I making all these crazy decisions. So the price is the last thing to change, and we want to anticipate the anticipators by getting in before the price itself really signals a change. Now notice that the momentum changed at this point here, but the price really didn't break out for several days later. Let's look at that on a closer examination. Here's our beginning fractal. Our first AO signal was when it crossed the line. Now, crossing the line here the first fractal has not been taken, so that we would not take that signal. Now, I know that I'm speaking Greek now because you don't understand what a baleo buy signal is. Just bear with me for a few minutes. This one we would take, and then we have 3 saucer buys that we would add on. So we would have all of these buys in addition to the balance line and in addition to the fractal. Let's look at the accelerator now. The AC is the accelerator. That's the one that tells you how fast the momentum is changing. Once again, we don't do anything until we have that beginning fractal outside of the mouth. And then we look for the momentum, or the acceleration buys. This price bar here, this buy signal, was not taken because it was not out to buy signal and it was not outside the mouth. It was on the wrong side of the mouth because it was underneath the jaw instead of being above it. So had we taken that, we would have been feeding the alligator. So we wait for that first beginning fractal. Here's our first buy, here's our second buy, here's our third buy, and here's our fourth buy. So we have fewer of these signals than we have the balance line or the AO, but we have 4 more signals to add into this 2-month campaign. Now look at what happens when we combine all of these signals. When you combine all of these signals in 2 months, and before we show you, just imagine what you could make if you had traded all of these on a daily basis. Now this means that you could do whatever you want to during the day, and you could analyze this chart in less than 10 seconds. And if you have any problem analyzing the chart, we have some proprietary software that's available that will analyze the chart for you in 1 keystroke. But had you traded this in just 2 months of April and May of 1997 and taken 1 contract per signal, now again, this is no intraday trading, this is not watching the market during the day, this is putting in your trades either after the market closes or before the market opens the next day. But had you taken every one of these signals exactly following the rules, you would have had over $500,000 profit in 2 months by starting with an account of not more than $50,000 to $60,000. With that kind of returns, we hope that this gets you a little bit excited. We hope that this is at least a slight turn on for you. And now let's recap what we've talked about today. Actually, let's recap the week so far. We started off the week by talking about we want to take blind chicken trades. We don't want to trade while the market's bracketed. Yesterday, we looked inside the structure of the alligator, Alligator Anatomy 101, and what we did today was look at several charts, but primarily the coffee chart, and showing you how if you used all 5 grounded dimensions, and remember that the grounded dimensions are the door openers for the underlying structure of the market, then we can anticipate what the market's going to do. And very simply, the way we use the alligator is that when the alligator is sleeping, don't trade. Just sit there. But watch the market, because when it wakes up, when it first starts to wake up, we want to get in the market, and while it's hunting its food, we want to be just ahead of the game and be very aggressively trading. So when the alligator's mouth is open, the alligator is going to direct us which way to go. And the alligator is going to be our asset allocator, and it's going to be our odds maker, so that the odds are on our side, and we're trading with the underlying structure of the market, and winning becomes the path of least resistance. Tomorrow, we're going to look at the S&P. We're going to examine 3 months and 2 weeks of trading the S&P and see how you would have fared in the S&P trading the same techniques exactly on a different commodity that's moving well. So do your morning pages, your twice-a-day AT tapes. We'll see you here again tomorrow for day 4.